All right. Good morning, everybody. Finally, after waiting all week, we're to the point where we're finally going to get some movement, probably. Probably. We get some data today and some data tomorrow. And then next week, we got Powell. We got a short week, non-farm payrolls, some pretty big stuff. UK down a quarter, Russell right behind that, then the NASDAQ, the Dow, the S&P, all in the red, but really not down by much. Japan up 0.25%, Hong Kong just beyond that. So we are going to get a little bit of jobs data today. This isn't the big jobs data that we're looking for. And it's this second revision GDP. This is the one, the big one that we've been waiting on all week. It's the hurry up and wait the market's been kind of counting on. Yesterday, we were keeping an eye on US dollar Japan and the JGB 10-year. It's still a threat. Still worth keeping an eye on that. The dollar, our 10-year, our 2-year. So you can see we backed off a little bit on US dollar Japan to the 3-day, but we're still holding these highs, this elevated level. Got the dollar still inside yesterday's range, but it's more in yesterday's Globex at this point and less about being inside the RTH of yesterday. Helpful that it stalled out and really stopped moving. We're back underneath that 106, not by very much, still holding the moving average. We want to see that break, see the dollar get back around this 10-period moving average, get underneath it. It's been a steady climb up since this tag back here. So just looking for some weakness, but we don't want to see fast moves in here either. We want a little weakness. Want things to just calm down a little bit. Getting some nice moves in gold. So if the indexes do continue to go sideways, it might be worth taking a look at either gold or perhaps crude, either one. And as you can see with the 10-year, we got a crossover of the 10-day moving average. It's been on the decline. We flipped it over, had a nice expansion in the Globex, opposite of what the dollar is doing. Generally, we want to see these two doing the same thing. So when we have this sort of disconnect, then just approach with a little bit of caution. Still don't have the AM edition of the Founders Note yet. When I get it, you'll get it. Took a little bit of time yesterday pointing out, some of the more useful features of that when it comes to answering the question in the morning, what kind of day are we going to have? Right? Because if you're trying to figure out if today is going to be a range day or a trend day, the charts are only going to get you so far. At that point, once you've kind of reached the edges of what the charts can give you, you got to get your data from somewhere else. A lot of times the bias on whether or not we're going to have a breakout day doesn't come from the candles, doesn't come from all the technical analysis that we can do on the chart. It comes from understanding the broader picture on what the entire market is looking for or looking at. Like this week, we kind of knew it was a week where we wasn't supposed to go anywhere, right? It was a hurry up and wait week. We were waiting on data. That isn't always so cut and dried. It doesn't have to be an economic event. The example yesterday that I was using is the NVIDIA earnings. You know, when we got into the week of NVIDIA earnings, that Monday and Tuesday and part of that Wednesday, we were in hurry up and wait mode. The markets wouldn't do anything. We were just playing sideways. The bias didn't come from the chart, right? It came from outside data and outside sources. So the charts are only going to get us so far. Having said that, there are some tools that help. Right now we have the floor pivots up with the channels around it. These are CPR channels, central pivot range. One of the things that we can look at is where's price in relation to this central pivot, above it, below it. How are we going to open? Now we're not open yet, but when we get into the open, are we a long ways away from it? You know, say under the S level or above the R level? And how wide is the channel? The wider the channel, the more likely it is that we're going to have a range at day. And the narrower the channel, the more likely it is that breakouts turn into expansions. It's kind of a key thing to say it that way. Not that we can expand on a day where the channel is narrow, just that if we do break out, the breakout is likely to turn into an expansion. You can see we already tagged that S level in the overnight hours. The range has been pretty clear all week. We're riding inside of Monday's candle. This is the level that we have to break out of. One side or the other. We got to get out of this zone. And as you know, notice just by looking here, 55 at 50, it's a round number, it's an options level. And 55.16 on the other side, that's the SNR level for the day. It barely covers yesterday's trading range. So it's kind of giving you that perfect visual. We got to get outside of yesterday's zone. Now at 8:30, we're going to get a data print. That could give us a big bar, like a liquidity play. So then we have the liquidity gap trade set up. And that can push us beyond one of these lines, the S1 down below or the R1 above. And as we get into the regular trading session, the RTH, that's where we want to evaluate how the market is opening. Above this R level, below this S level. Now, an R1 and an S1 isn't far enough. When we talk about gaps that are really big, tend to just widen further in the regular trading session, and smaller gaps tend to get closed. Well, how big is big? That's always been a contentious question to ask because every market's got a different size, right? But the R2 and S2 levels tend to work as a defining characteristic of how far of a gap do we need before we get a gap and go that doesn't reverse and go back the other direction. So if we open beyond the R2 or beyond the S2, then we would expect the gap to not get closed for the expansion to continue. Then we would just expect to play that move. You got the ADR levels here, and they're just a little wider than the SNR levels that we were looking at. We're basically flat on the morning, so we don't have much edge in trying to discern if we're going to go to the upper edge first or the lower edge. Unlike one of these mornings, say like last Thursday, when in the Globex, we were already really close to one side. And if we get really close to one side, then that becomes the destination. And if we do that early enough in the day, it opens the door for us to go to the other side by the end of the day. That works out really well when we have a something to play on, but we don't have anything. We're still sitting right here in the middle. We don't have an edge towards one side or the other. We also don't have much distance from VWAP. Now mine resets at midnight rather than 6 o'clock. But you can see how we've been holding really close to the VWAP, like a really tight range or zone, and even reciprocation while we are getting it, it doesn't have much room to travel because we weren't very far above it, so we didn't go very far below it. It's starting to expand a little bit. This next run up was farther away than the last run up, but we're still going to be now looking for reciprocation on the other side and expecting to go a little lower this time because we went a little higher last time. Holding the range until we get data at 8:30. We've been waiting on this data all week. The market's very likely going to be hedged, although at this point we're not seeing hedging activity. Spot Gamma was pointing out that there's been a lot of options flow stacking up on each side of the Monday's levels. So below Monday's low and above Monday's high. And it might be that the reason we're not seeing any hedging is because they've already been building out their levels all week, just maintaining this range and slowly adding to it. Not quite sure I like that answer. I'd much rather come in and just see that there's hedging, but we don't have hedging yet. We would know if they were hedging. We would see a market maker move signal across the top on a label. We don't have it. Volume's a little light too, sitting at 56. We would want to see it looking better than that. And you can see just from the slope here, how these previous days, even in this sideways week, we've been getting much better numbers than what we have this morning. So they're sitting out, but so far they're not hedging enough to register as a market maker move. That market maker move comes from the options chain here. If we just look at the closest expiring options and the implied volatility average, if this average gets higher than the next series out, then we know that they're hedging. These numbers are derived by out of the money options trading. We can see that there's a little bit of options volume this morning, not a lot, 1,000 on each side. So they're doing a little hedging, but not enough yet. If we see enough hedging, it'll change this number because this number is the average of all of this out of the money implied volatility and all of this out of the money implied volatility. So they'll add that up, they'll get the average out of it. And if it increases fast enough and gets above this number, then we'll know they're hedging. We'll have a market maker move. That's not a surprise. It's think or swim. It does goofy things. And you'll see some odd numbers from time to time, or it'll just straight up not give you a good number at all. You can see right now that the negative number is still here, which it'll drop off as we get closer to the open, and it might last all the way until we actually get into the open. But once that level disappears, then it'll be looking at where it's supposed to look, and it'll be reading those two numbers. But this is why you're getting that error, and you're going to continue to get that until this is gone. Gotta love think or swim, right? In the founder's note, it'll generally have levels for the QQQ, and that think or swim indicator that I share every morning from Spot Gamma has the levels in it as well, so that you'll have the call wall, the put wall, all of that good stuff. Call wall on the Qs is 485. So we can see the weekly pivot point. We got above it, came back down below it, really been struggling with it. Even this morning, we've tested it again. It's that weekly pivot point. I'd like to say if we can get above it, we'll keep it, but we've gotten above it multiple times already and we weren't able to keep it. It's just more of a midline than anything else, really. We got to get above Monday's high to really expand, or we got to get below Monday's low to really expand, and anything else is just the continuation of the chop. 10-day, 30-minute volume profile with TPO. We got into that air pocket and found the structure, 5511 cog line, and the pivot has liquidity on the other side. If we break that 5511, we'll get a real true test of this high volume node down here. That high volume node should last through maybe into Friday. We're going to lose some of this volume, through the day today into Thursday and Friday. As we lose more of this volume across the back here, then this high volume shelf is going to slowly dissipate. There won't be anything left. SpotGamma has been pointing out that if we break 5,500, it's a pretty clean shot down to 54. Although there is a little bit of structure at 54.50, they said they really don't count it. They're not counting on it to provide much support or much help. We carried Tuesday's volume profile point of control into yesterday's trading session, and it was where we bounced for a moment. Price came down, interacted with that level, but wasn't able to keep it. It didn't act as a significant level of support. It just paused the market momentarily before we cut through it and continued to go lower. I point that out because I had someone asking about it as a support level. Nothing is support until we look back afterwards and see that it actually was support. Until it proves that it is, it's always potential support. And I'm as guilty as anybody else of not using that word potential, but there is no support or resistance ahead of us. There's only potential support, places where it's possibly going to see support or resistance. But until it actually proves that it was resistance or it was support, then it's just that. It's just potentially a level of support or resistance. We don't need to carry forward Wednesday's point of control because we've already cut through that level multiple times, because I only mark out the ones that haven't been hit yet. Now, the textbooks will tell you to carry these levels forward whether they've been hit or not. The value area high, the value area low, and the point of control from yesterday. I've got enough pivots. I'm not going to carry them forward unless they're virgin, untouched, unhit levels. But if you want some pivot points, then those are consistent levels that you can mark out and carry forward. A lot of times they line up with the RTH, the RTH low and high, or the Globex low and high. And so they're a lot of times they're levels that I already would have had because they were a high and low of the session. We're still maintaining our range. It's a very clear range. And even when we do break out, a measured move of 50% won't get us to the top of the range. Even when we flip this around and take it the other direction, a measured move to the downside won't get us to the bottom of the range. We have plenty of room even beyond that, before we get to the edges. 5,600 on the upside, 5,470 to the downside. But it's been a very tight week, as we were expecting, right? This has been a week where the whole play all week has been, we're probably going to hold the line. It's going to be, slow, choppy, boring. And it's not done yet. Next week, we've got Powell, we've got a short week, got economic data points, non-farm payrolls. It's another week of this high anxiety, high volatility, hurry up and wait, sideways, choppy mess. And that's just what's on the table. There is a threat, though. When we have lower volume, price can move farther. I know that's something that generally newer traders struggle to wrap their head around, but a lack of liquidity can make price really move farther than we expect it to. The easiest way to kind of visualize that is these orders that are on the dome here. So in a lower volatility, low liquidity environment, instead of seeing double digits, we might see single digits or even just numbers in the teens rather than in the 60s, 80s, hundreds. So then when a big order comes in, like a 100 lot, instead of moving 2 ticks, it could move 5 ticks just because there's less liquidity there. And so a big order can move us farther in a low volume environment or a low liquidity environment. So since we've been going sideways, it's pretty obvious that we're not overbought or oversold. We're not overextended. We haven't gone anywhere. We haven't done anything. We have touched the 10-day multiple times this week, which doesn't really register on this since it's only looking at how we close. It's not looking at what we do on the intraday. But if you look at the daily, how many times I'm going to save this thing? If you look at the daily, we've been riding that 10 all week. Now, this is like a correction in time rather than a price correction. I'm sure you've all heard about how price will correct itself. This is kind of correcting itself right now, but it's doing it through time. And I thought that was just a cute, fancy phrase until I actually went and started researching correction through time. It's a real thing. It's not just some off the cuff, phrase that sounds smart but doesn't really mean anything. There's more behind it than just a funny phrase. So we have corrected. Time has passed. We've held the 10. We gave it time to catch up to us. Now what? Right? We've got our reset. Just like we did back here after we made a really big move. We corrected sideways, gave the time for the 10 to catch up with us. And then we made another big move and another big move, and then we corrected again. Now, that doesn't necessarily mean that we're going to go higher from here, just that the correction is ending. We're starting to get pressured. It's kind of like when somebody's in your face and you back up and they step forward and they're in your face again, and you try to back up, but now your back's against a wall. Okay, now what? You still got someone crowding you in your face. That's the 10 pushing against price. Its back is against the wall and the 10 is in its face. It's time to go. We're very likely going to see that kick off today, maybe tomorrow. So it strangles, straddles though that wouldn't be a bad idea. And since we are so far away from the edges of these ranges, putting on butterflies for either side on Friday wouldn't be a bad idea either. They'd probably be really cheap too, all things considered. You know, butterflies generally are just really cheap. So we're looking at 55.30 and 5400. It's pricing at $20 right now, but I think after the market opens, we'd see that normalize a little bit. Probably could work the order and fill for 5, maybe 10 cents. This is a $5 wide spread, so you would be risking $5 or $10 for a chance to make $485, $490. I mean, that sounds like a pretty good plan to me. That's the upside. We could do the same thing at 5,400. Just put on a butterfly on the lower end. Butterflies have a lower expected win rate, so just something to keep in mind. This is not a high win rate strategy. The thing is, if you've been trading for any length of time yet, then you know it's not about winning and losing, right? We're not keeping score. This isn't a ball game. It's about how much you make when you win and how much you lose when you're wrong. Boy, Thinkorswim jams up every morning right here. Just got to give it a moment. It's stuck. Hey, there it goes. The China ADRs are down more than 1%. The Mag 7 is down, but not enough. And for things that are up, the VIX is up a little bit. It's still down more than 3%, really closer to 4% over the last 5 days, but it is up this morning more than 1.25. Gold miners, those are both up. And Bitcoin's trying, it's just not up enough yet to reach our qualifications. So crude with this really nice gap up this morning, it's still inside day, needs to get outside of yesterday's range. And you can see how we've been sideways in crude all week. This would be a really nice expansion if we can get it, especially after this move up. It's been digesting and correcting here. But that was a really big move. So, you know, it might need some more time. This is a nice push. It's trying. Really needs to get above $80 if we're going to see that expansion. Gold miners, inside day breakout. It started. It's also red to green, and it's a very small TRB setup. TRB is a trend line breakover. Don't worry about the visual cues, but it would look something like that. TRBs owes us back to the top, so call it 34.50. It's a 50-cent move, but it's a $35, $34 company, right? We're everything in perspective. It's a reasonably decent move back to the top of the range. Generally, I like a bigger TRB, but you take what you can get, right? This is red to green, so R2G is what they call that. You see the pin bar reversal and how it closed higher than 50% of that red bar. And then now in the pre-market, we're gapped up and running and we broke outside of the previous day's bar. That's a really nice bullish setup. One of the things that you can use for qualifications on this is that once we actually get into the open, it better not come back inside of yesterday's bar. Now we could see it fade down and tag, say, the high of yesterday, find some support there because that's potential support right now. But really, you wouldn't even want to see even that much weakness. This is supposed to be, an aggressive, wow, shock and awe kind of continuation of yesterday's reversal off the lows. You don't want to see it pause and meander around and back up and tag support. Kind of calls into question that high momentum breakout thrust that we're supposed to have, right? So if it starts to indicate weakness, then I wouldn't mess with it too much. You can see it's a very gappy product, a lot of fake outs and quick reversals. This is not an easy one to play. Nat gas is also up this morning, but it's still a dog. It's still trash. And, it still very likely has a date with this year-to-date VWAP. Come back down and very likely get underneath it again. It is nice to see that it was able to recover when it came below it back here, but this equal high, market didn't like it and sent it back down. If we can get a higher low here, we could get a chance to challenge this high and get that higher high. But that's a really steep year-to-date VWAP, and it just seems like it has a lot to prove still. So China, whether you're looking at FXI or KWeb, even emerging markets down this morning, not going to get much out of the Baba, Baidu, JD, PDD crowd. I wouldn't even look in that direction for any sort of longs. Pot stocks are up, but that's not saying much. We can see here in the pre-market there, it doesn't look that good. They're more algo prints than anything else. And that's not the kind of flow we want to catch. Semiconductors just very close to our 0.5% mark for being up or down on the negative side. This isn't looking very good. That breakout from yesterday was just a fast failure. Didn't even make it to the halfway mark and down it went. And then it broke the 50% mark of the previous day. So if we were gaming this out, we would have had this day marked as our halfback, needs to close above that level. And if we wanted to use the bigger range, then we would have marked this first day here, the 24th. And at that point, we're still underneath the halfback, 260, nice round number. So semiconductors stuck underneath this 260 level. Even if we can get through that, 265, just like I said yesterday, is still the level we have to keep. We can't get through that, then we're not going to get much out of semis. On the other side of that, though, 255 it has held at this point. So not bullish, but not bearish, not yet. We'll see. Cloud is one of those that doesn't usually get a lot in the pre-market. It is down and it's a full candle rather than one of these little algo prints, but we're not seeing much else yet here. This doesn't have all that great of options either. So, just look at the continuation that we've been having. This is not something that's going to turn around and run back up anytime soon. It is getting extended from this year-to-date VWAP. And so at some point, probably after the August QRA, we could get a bigger, wider, like a weekly TRB setup and run it back to 21 or this year-to-date VWAP, but we're not there yet. Not even close to being ready for anything like that. It's a hurry up and wait morning until 8:30. And I'm not going to stream until 9 just to stick around and see the 8:30 print and then what comes after that. You're going to want to do everything that we just did after we get that 8:30 print, closer to 9, even 9:15 if you have the opportunity. See which one of the sectors and industries are moving and what's up and what's down at that point after this 8:30 print comes out. Till then, there's really not much else to look at because everything that is moving could very likely be the opposite of what it is in about 25 minutes. So everybody be careful, be safe. I'll see y'all.